Hi, welcome back to BitWise. The Fear and Greed Index is used to measure investors' sentiments towards the markets. This index reveals whether the markets are bullish or bearish, and it is constructed based on two opposing emotions, fear and greed. Alternative.me adapted CNN's approach and developed a Fear and Greed Index for Bitcoin. This index is a potential method to identify investor behavior towards Bitcoin and can be loosely applied to cryptocurrencies in general. Want to know more? Let's get to it. How calm are you during extreme crypto market conditions? Do you tend to irrationally buy more and more crypto when the market is rising? Or are you allergic to red numbers and have the urge to quickly sell your assets when prices drop? Well, investors' sentiments of fear and greed can be crunched into one simple magic number called the Fear and Greed Index. In this video, we're going to take a closer look at what comprises this index. Make sure you stick to the end of the video where we will cover how investors use the Fear and Greed Index to make better investment decisions. Before we go deeper, click on that subscribe button and turn on the notification if you like to stay updated on all things crypto. Let's begin. Where did the Fear and Greed Index originate? This index was originally developed by CNN Money for the stock market to measure two of the primary emotions that influence how much investors are willing to pay for stocks. To calculate the index, CNN examines 7 different factors of fear and greed and scores investor sentiment on a scale from 0 to 100. The indicators are put together to create the final index. What does this number mean? Well, the index can be used to gauge whether the stock market is fairly priced based on the logic that excessive fear tends to drive down share prices, and too much greed tends to cause stock values to rise far above what they should be worth. What about the Crypto Fear and Greed Index? Alternative.me adapted CNN's approach and developed a Fear and Greed Index for Bitcoin. Just like the original, the crypto version of the Fear and Greed Index is used to measure investors' sentiments towards the markets. The magic number then reveals whether the markets are bullish or bearish based on the logic that investors are fearful when the market is depressed and greedy when the market is bubbly. We saw that CNN Money's approach includes using 7 different indicators to come up with the final index. What about crypto's version? The concepts of calculating the index are fundamentally the same, but the indicators used are different, whereby a mixture of 6 quantitative and qualitative measures are used. You will notice that these 6 indicators don't have equal weights, unlike CNN Money's indicators. With that said, let's go ahead and look at the 6 indicators that contribute to the final Crypto Fear and Greed Index. The first indicator is volatility, which accounts for 25% of the index value. Volatility examines a cryptocurrency's current price and compares it to recent price movements over the previous 30 to 90 days to determine how volatile the market is. In the index, volatility is used as a fear indicator. For instance, a sharp rise in volatility might indicate that the market is fearful. The second indicator is the market momentum and volume, which represents 25% of the index value. Market momentum simply refers to the market's ability to maintain a long-term price trend. Therefore, to calculate this indicator, Bitcoin's current market volume and market momentum are compared to the average of the last 30 and 90 days. The index's greed side takes momentum into account. For instance, when there is a strong volume on the buy side when the market is up, it translates to investors' greed in the market. Remember that Elon Musk tweet that caused a significant drop in Bitcoin's price? Well, social media is the third indicator with a 15% influence on the index. With social media being a big aspect of our lives, a high interaction rate in form of posts, likes, and hashtags results in a grown public interest in a coin, which corresponds to greedy market behavior. The fourth indicator is dominance, which accounts for 10% of the index. Dominance measures how much market capitalization Bitcoin takes up from the share of the entire cryptocurrency market capitalization. The larger the Bitcoin dominance, the less speculation there is for altcoins, which might signify bearishness among investors. Think of it this way, many investors regard Bitcoin as the safe haven of crypto since it has been around the longest. Therefore, a rise in Bitcoin's dominance may be interpreted to be caused by a fear of investments in speculative altcoins. On the other hand, when Bitcoin's dominance shrinks, investors are getting more greedy by investing in more risky altcoins, in pursuit of high rewards. Trends come in as the fifth indicator, which accounts for 10% of the index value. A high volume of Bitcoin-related searches means a high degree of greed among investors. In fact, historically, increases in Bitcoin-specific Google searches have been correlated with extreme volatility in crypto prices. For instance, the term Bitcoin's price manipulation brings up this chart. The spike in the graph around May 2021 translated to a 5% decrease in Bitcoin's price. This can be interpreted as fear in the market. Lastly, we have surveys which account for 15% of the index value. This indicator is measured by conducting weekly surveys on a polling platform to see what individuals are thinking of the markets. Combining all these indicators gives us an index score that runs from 0 to 100. With 0 indicates extreme fear where investors are overly bearish on the outlook of Bitcoin, while 100 indicates extreme greed where investors are overly bullish. So, how can investors use the Crypto Fear and Greed Index? Investors can use the index as a trend indicator that will help them to invest in crypto more wisely. For example, when the index value is high, it may indicate that the cryptocurrency price will fall soon and may represent a good time to sell. On the other hand, when the fear and greed index value is low, it may imply that the cryptocurrency price will rise, which may be a good buying opportunity. Now on to the big question, does the fear and greed index provide reliable insights into the future price of cryptocurrency? Short answer, no. This is mainly because the fear and greed index is only concerned with the analysis of sentiment. That is why we have technical and fundamental analytics that are unaffected by market participants' emotions and hence, are the more preferred methods of predicting a market movement. As we come to the end of this video, remember that crypto markets are volatile, and no single measure can accurately gauge them. As an investor, you should always use a holistic combination of market metrics when making decisions. And most importantly, stay calm even in extreme market conditions. As billionaire American investment guru Warren Buffett once said, "Be fearful when others greedy and be greedy when others are fearful." Remember to like, subscribe and follow us. Just a moment, we have a bonus as thank you for watching this video till the end. If you're also interested in investing in cryptocurrencies and owning a piece of the future of money, I have good news for you. All you need to do is download the Luno app. Luno is the first cryptocurrency exchange to get licensed and regulated in Malaysia by the Securities Commission, so you're safe to use it. Once you have downloaded it, go to the rewards section and type this unique reward code, NUB8XT. Once you do that, you can deposit and buy cryptocurrency. Promotion for a limited time only, purchase a minimum of 100 ringgit of any cryptocurrency, and you will receive a 25 ringgit reward of Bitcoin. Just make sure to key in the code before any deposit and purchase. I will leave a link also in the below description. Once again, a quick disclaimer that nothing in this video shall constitute financial advice. You are responsible for your own financial choices.